Hello traders, it is Sunday evening, February 16th, and it is time for our weekly video. I like to start each one of these videos off with a review of our previous picks so you can get a feel for how well they performed. That's how you can get an appreciation for how well this trading system works. TSLA. This was actually a pick that I gave you about 2 weeks ago, revisited last week, legged out of a bullish put spread that we had on, and given the price action that I'd been able to witness since the earnings report a week ago Sunday, I had mentioned to you that this looked like a really decent short. So let's zoom in on the 5-minute chart. Let's go to the 15-minute chart. It'll be a little easier for us to do that. And you can see this is the price action Friday. So the video would have come out Sunday. You can see how Sunday to Monday morning, the stock opened a little bit lower, but we got some nice selling pressure Monday, and then Tuesday, stock dropped about 15, actually it dropped about $25. So quite a big drop in Tesla. You did have to be somewhat nimble. You had to buy the position back and take your profits, but a decent pick. I was also looking for some market weakness, and right now, the market has been sideways. It's been trading higher. It's been trading lower, but we'll get into market analysis in just a bit. I've been keeping my swing trades to a minimum, really been focusing on the short side. That's where I feel most comfortable right now, but I have to have that market backdrop in order to take short positions. Google, we did a live event on Wednesday. If you've never attended one of the live events, please do. Lots of questions are asked. Chances are you've got those same questions. So on the YouTube channel, make sure you click that live event tab, and then you'll see when we have upcoming events. You can also take a look at some of the previous live events. As I mentioned, lots of educational content. We go over picks, why we like them, why we don't like them, and these are all stock symbols that you provided to us. Google on Wednesday, right here, I like the price action. Stock had been drifting lower and drifting lower. If the market had been able to break below the 50-day moving average, which you can see, this is Wednesday, we really needed that crack down below the 50-day moving average to get things cooking on the short side. But you can see, even with a big day on Wednesday, big update on Thursday, and treading water on Friday for the most part, the stock has not been able to get off the deck. I think Google is still a good short. I am short shares around the 185.30 level. So I've got a swing position on. The stock did not rally with the market. That tells me that there is some selling pressure. I'd like to see it stay below that 50-day moving average. I'd like to see it stay below AVWAP-E. As long as it's able to do that, and as long as I don't have a market breakout to the upside, I'm okay hanging on to that short position on the notion that at minimum, it should visit the 100-day moving average. So that's currently what I have on right now, but let's take a look at the market and let's do some market analysis. There hasn't been much for us to work with. And you can see how the market is trapped in this horizontal trading range. It's been that way for about the last 3 months or so. And this is simply a spattering of candles, green and red, all over the place. So there is no market trend. We are near the upper end of that trading range. And will we get a market breakout? I don't think so. Look at how abysmal the volume has been. Apart from a couple of days here and there, the volume has been horrendous. And on those days when we did get good market volume, there was Trump tariff-related news that was hitting the wires, so we would get these volume spikes. In general, the last 3-4 days, I want to really focus on. So what we've had over the course of the last 2-3 weeks has been a news cycle window, as I like to look at it. FOMC statement. Big news. What is the Fed going to do? Are they going to continue to be hawkish? So we had that event. We had mega cap tech earnings, huge earnings releases. We also had major economic releases. No impact from any of the above. And so we head into this week. Well, what are the chances that we're going to break out on the news this week? I felt that the CPI had a chance to be hot this week. And I outlined the reasons for that in my video last Sunday. CPI did come in hot. You would think that the market would sell off on that news because it means that the Fed is going to pause longer. If in the meantime, while the Fed is wanting to pause and keep rates high, if in that time we start to get some weaker economic numbers, the market is not going to like that. It's going to want to see a very responsive Fed that recognizes that economic conditions are slipping. So we had this initial sell-off, and you can see down to the 50-day moving average. This was on Wednesday. What did the market do on that weak or hotter than expected CPI number, I should say? It rallied all the way back. What the heck? Where did that come from? I was pretty surprised by that move. I did not think that the market would gap down and recover so easily. But we still have the PPI coming out on Thursday. Perhaps the reaction will be different. So PPI comes out and the reaction was the same to a hot number. So PPI came in hotter than expected. Well, maybe this is when they're going to actually knock the market down. That is not what happened. The market gapped up and it finished near its high of the day, and it almost made a new all-time high. Friday, we got retail sales. Okay, well, seems like the consumers have been fairly cautious. Maybe a weak retail sales number will get the market cooking to the downside and attract some profit taking. Retail sales dropped 0.9%. That is a big drop. I believe a increase of 0.2% was expected. What does the market do? It treads water the whole day right at the all-time high. This market does not want to go down. Yet, I'm seeing more and more and more evidence of this undertow, and a lot of it is global. So be it numbers from China, be it numbers from Europe, economic growth is decelerating globally. We have central banks who have been cutting interest rates. India just did a quarter-point rate cut. This is their first rate cut in, I believe, 5 years or so. Bank of England cut interest rates by 25 basis points. Lots of central banks are concerned with the economic backdrop. We're seeing consumer credit delinquencies on the rise, the home market, new home inventory at high levels, new home purchases, mortgage applications, incredibly low. So we'll see what happens here. Even though the market is treading water near the all-time high, and the market has been able to deflect bad news after bad news after bad news, I still don't want to take any longer-term bullish swing positions. I don't like the backdrop, and I feel that it's just a matter of time until we start seeing some weak economic data points domestically, and combine that with a reluctance on the part of the Fed to lower interest rates, and you should have the right ingredients for at least a market pullback. And then as we get this market pullback, we can evaluate what happens at the 50-day and the 100-day moving averages. But you can see the moving averages are converging, and that's consistent with the market being in a trading range right now. So how do we trade this? I mean, what do we do? Personally, with this low volume, I don't trust anything that I see the market doing. Is it possible that the market could break out this week to a new all-time high? Yes, it is possible, and the market could float higher on very light volume. Does that mean that I'm not going to trade it at all? Well, I'm going to stick to day trading. I don't want to have a lot of overnight risk exposure. There aren't many economic data points coming out this week, so there's really nothing to drive the market. We have a holiday shortened week, so we've only got 4 trading days this week. I'm looking for the market to attempt to break out here on the upside, but I'm not going to be trading it aggressively at all. I'm going to be day trading primarily from the long side. If we get that breakout, we need to see follow through buying anyway, because a long green candle to a new all-time high can instantly be smacked right back down. So a false breakout, very possible. I would be particularly careful if we get a gap up open to a new all-time high. Gaps up to a new all-time high are very frequently faded. Now, the thing that you'll want to watch for is in a gap reversal off of a new all-time high, you're going to see selling pressure early. Okay, so it's not going to take place 2 hours after the open. If there is profit taking and if there are sellers, you're going to see long red candle, long red candle, long red candle. 3 bearish candles right off the bat. And that's going to be a sign that resistance is still in place. And if you take a look, that was a gap up to a new all-time high. That was a gap up to a new all-time high. That was a gap up to a new all-time high. That was a gap up to a new all-time high. You get the idea. You have to be very careful on gaps up to a new all-time high. So how could we make a new all-time high that wouldn't get smacked down like that? Well, in those cases, you're typically going to see the market open flat or a little bit lower, and then the downside is tested, the downside is tested. You find support within the first hour or so. Buyers come in, they support that move, and then you get a breakout to a new high of the day, and then momentum starts to build, and then you get your breakout to a new all-time high with the market closing on the high on good volume. Good volume is critically important right now, and we don't have it. So I don't see a catalyst. In fact, I see the opposite. I don't quite understand what's fueling this market rally when you've got a hot CPI, a hot PPI, deteriorating global economic conditions, central banks easing without seeing any type of economic growth coming from those efforts. We'll see what happens. So for me personally, I can see that this is very wimpy, weak, range-bound trading action. We got a doji on Friday, which could signal a change. We're seeing lots of price movement both ways. Put up the 30-minute chart, take a look, and you'll see there is some pretty decent movement. We did have a little bit of volume on Thursday towards the close, this move right here. That was the best move of the whole week. So right now, I'm staying neutral. I am going to give you a bullish and a bearish pick today, but I would be super careful on the long side if we get a gap higher. The only way that I would want to consider this bullish pick is if you get a market pullback on the open, and let's say we get through the first hour of trading and support has been confirmed, and then the market starts to inch its way higher. Fine, I'm good with that scenario. This stock has had nice relative strength. It's coming right off of my green Royal Flush search. You can see how Netflix has been compressing. It had a very nice earnings reaction, broke out to a new all-time high, spent a lot of time at AVWAP-E, and now recently it's just started to distance itself from AVWAP-E, and that's taken place when the market has done a whole lot of nothing, just moving sideways. So I like Netflix. If we take a look at the price action on Friday, you can see this was a nice steady grind higher on good volume. Again, I am only day trading from the long side. I am not taking overnight swing positions. And be very careful if we get a market gap up to a new all-time high, because those typically lead to gap reversals. So we've got to make it through that first hour. Buyers have to show that they're supporting the market in order for us to want to take a long position. On the bearish side, we'll take a look at, we'll go into Red Royal Flush. I'm going to take off my option liquidity and let's see what that yields. Not a lot of picks on the bearish side, not a lot of search results. One of the reasons for that is that the market is near an all-time high. When we have bullish price action like this over the course of the last 2 weeks or so, which the market, although choppy, has been moving higher, we're not going to get a lot of search results on the bearish side. But I've gone into Pop Bear and GoDaddy. You can see gap down and then had steady selling pressure the entire day on heavy volume post earnings. It dropped below the 100-day moving average, and it did so with conviction. So I like this price action. What would I want to see? What is my ideal setup? Well, my ideal setup would go something along these lines. First of all, that tells me that long red candle and a close near the low. What did the market do on Friday? Nothing. It moved sideways. It did finish a little bit higher, but you can see that even with the market heading sideways, GoDaddy was selling off. There is selling pressure in this stock. What I'd like to see, and a good setup for me, would be a nice big rally in the market when it opens Tuesday. Let's say we get that nice big gap up. Market kind of holds its own for the first 10, 15, 20 minutes, maybe a wimpy little rally, and then the market starts to roll over. Ah, good. That tells me that there's resistance at the all-time high. What does GoDaddy do? It tries to recover some of this area below the 100-day moving average, which you can see is at about, let's call it 188. Stock finished at 182, so maybe the stock rallies up to about 185 or so. It stays well below the 100-day moving average. It preserves more than half of the long red candle from Friday. Both key elements, because I want to know that sellers are still in there hammering away at the stock. So even though the market opens higher on Tuesday, even though the stock might have been slightly oversold on this drop, when it tries to rally with the market, it hits that resistance at the 100-day moving average. Why? Because sellers still want to unload stock, and the stock can't get any higher. That's the kind of selling pressure that I want to see. The same people who were in here pounding this stock mercilessly on Friday, I want to know that they're still around. And the best way for me to find that out is when the market is moving higher, not when the market is moving lower. I'm expecting this stock to move lower on its own because there were sellers there Friday. If the market opens lower, the stock's gonna move lower. I would rather see the market rally a little bit. Give me your best shot. Come on. Let's see how far you can run higher. If the market runs higher and the stock is barely able to get above 183 and it's very close to Friday's closing price, that's a great sign that sellers are still unloading stock. And the first moment that the market starts to show some signs of weakness, this stock is going to crumble and it's going to stage another leg lower. So I really like GoDaddy. on the short side. I'd love to see a market rally that the stock does not participate in. Half that long red candle has to be preserved. The 100-day moving average absolutely has to be preserved. I don't want to see any big bounces in the stock. If I get all of those ingredients, then GoDaddy is going to set up for a good short. Conversely, market needs to prove to us that it wants to move higher. It needs to be able to break out to a new all-time high. We need to see that follow through. If we have that, then we've got a really nice long pick in Netflix. What would be my ideal setup for Netflix? Since we're talking about ideal setups, Tuesday, ideal setup would be that the market pulls back. Not perhaps as dramatic a pullback as we had here on the CPI number, but a smaller pullback. And then you start to make a series of higher lows. And then now the market looks like it's going to get on track. And during this market decline, early in the day, Netflix holds strong. It doesn't give any of the gains back. And then I know when the market shows me that it's making higher lows and that support has been formed, as it continues to move higher, Netflix is going to lead the charge because it's already shown us that it has really great relative strength. And one of the tactics that I've been using over the course of the last couple of weeks, because the market hasn't had any real strength, is if the first move of the day is wimpy. What does that mean? Wimpy would be mixed overlapping candles, somewhat like this. Okay, this is a wimpy little rally. We fill the gap. We had a little gap down. I'm looking for this contra move right here, the first contra move. So if the first move is wimpy, I'm looking to trade that reversal. So I would be looking to short here. I get a bearish engulfing candle off of the high. This is where I'm going to have my shorts lined up. And as soon as the market pulls back, starts to form some support, I'm going to be taking gains on those short positions, particularly if the stock momentum has started to wane a little bit. So watch for that first move of the day. We don't have any big economic releases this week, so the chances of having a huge market gap up or some type of catalyst that's going to attract buyers or sellers, probably not likely. But what we are likely to see is that initial wimpy first move when the programs are really dominating the action and you've got these mixed overlapping candles on light volume. I don't care if that first move is higher or lower. I just want to see that there's exhaustion for that first move, and then I'm looking to trade the contra side of it, long or short. I really don't care because the market's just chopping around right now. Thanks so much for watching, everyone. Please leave your comments. I'll make sure to reply to them. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.